Dude, what are you talking about?
Dude, my stocks.
What's good, people? Today I wanted to bring you 5 good reasons why I think you shouldn't be short-term trading in the stock market. Once again, this is my opinion, and I'm bringing a lot of perspective from my life, but I'm also bringing in some facts, so, take it how you want it. So my first reason here today is your profits over time is way less than you actually think. So 80% of day traders have a median loss of about 33% every year. So when you look at the general trend of the economy is usually around 9%. So if you were to invest in the S&P 500 today and wait a couple years, you would probably get about 9 to 10% profits every year. If you're making profits initially, like you're making crazy returns, you're also going to be losing in the short-term trading because there's more volume involved. The more you trade, the more your risk is increasing. So over time, you're going to be winning some, but you're also going to be losing some. And then when you count those up and you kind of stack them up against each other over time, the statistics say you're most likely going to be losing. So 90% of traders lose in the stock market. In addition to this as well, so the statistics also say if you are to miss the best 10 days in the stock market, that is if you're day trading a bunch of different stocks here and there and you're bouncing up and down, left and right, moving around so much, if you miss the 10 best days in the stock market, you are losing almost $600,000 of possible opportunity that you could have made in like 5 to 10 years. But if you were to make those 10 days and you actually were, invested in the long term and you didn't care about the short term volatility, and you just stayed and you made those best 10 days, that could be the difference of $600,000, which is a possibility in the market. But if you were short term trading and you're, going in and out, up and down, left, right, jump in the corner, you're probably going to miss out on these opportunities because, you're not going to be there when you're supposed to be there because you're trying to time the market. One important thing I'm going to say is time in the market is way more important than timing the market. This leads us to our second point, which is it is time consuming. So day trading takes a crazy amount of time. I mean, you're doing a whopping lot of research on a whopping lot of stocks and a whopping lot of things going on and technicals and this analysis and oh my God, there's a lot of stuff, right? So there's so much going on and you got to focus very little time on so many different things that are so spread out. It becomes time consuming. It's another daily commitment that you gotta dedicate your time to. So it's like having another 9 to 5. If you already have a 9 to 5, well, here's 2. So you have 2 jobs now, and you gotta take care of both because when you're day trading, if you mess up, you don't want to do that. That's a no-no because you want to be right all the time. You want to be right at least more than 50% of the time because you want to make, more than what you're losing. But that's the thing again, you're gambling away. You're kind of throwing your eggs into one basket and hoping it takes you somewhere, which, I mean, it could. Very much could. Moving on to numero tres, it is stress, So this is one that actually weighs down on you a lot. So when the bell rings in the morning, ding, 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 and the market kind of opens, you're there sitting, wondering what's gonna happen today. Like, is it gonna go up? Am I gonna lose it all? And it's like you're constantly playing a game with yourself every day, like a up down, and your heart can't take it. Your heart really can't take all that, uncertainty and like fear and like what's gonna happen? I don't know. Like I'm scared. I'm nervous. I'm like you're anxious every day. Like it takes away from not just from your life, but it takes away from people around you as well. And you're probably not going to notice it, but you're probably more irritable some days or more annoyed about little things because, the stock market is not acting the way you want it to. And that's the thing. It's never going to act the way you want it to. It's out of your control. You just, try to find waves that, you can ride, but you can't want everything. You got to, you got to find what's best for you. So I would say stress is very unhealthy and it's really not for everyone. Like, so, if you can handle it, by all means, but very little people can handle the amount of stress it brings to their lives because it's not really worth it at the end of the day is what they realize. And another thing is health is wealth. So if you don't have yourself right, you're most likely going to be making a lot of bad decisions anyway. So keep that in mind. Moving on to the fourth item on the list, I want to say overconfidence is the number one killer. So whenever you make a couple good picks, or you're riding a good wave up and up and up, and you're making a lot of money day trading, you're like, oh my God, I am the legendary trader. I'm the best. DJ Khaled, another one. And you're like, oh my God, I can't lose. Like, all I do is win, win, win. But nah, it's not like that. It's really not. And that overconfidence really hits you, and you feel like, okay, my next pick is going to be better. My next pick is going to be better. But that's the thing about the market. You never know what's going to happen. You could have the best technical analysis in the world, period. And then just, the market's uncertainty kind of takes away from that. So there's never really much to really know in the short term, because anything could happen. Like, you could be betting on something going up in this short interval, but it goes down. And then right after you pass that interval and you kind of like trade it away, right after you trade it away, it could just go back up, and then you just missed out. So, don't let your overconfidence mislead you. Speaking of tricks, this brings us to our fifth item on the list and last. So this is your emotions. Sometimes do they lead you astray. So I want to say the first one is hope. So the hopes of trying to make more profits, make more money, do better in the stock market. That hope is going to drive you to kind of say, okay, other people are making money. This looks like a possibility. This person recommended the stock. I'm going to check it out. And then when you get that hope inside of you, you're like, okay, I'm going to try to trade it here during this time period, make my money. And then greed kicks in. And then when you get inside the game, you're like, okay, I want to make more. How do I get more? How do I get more? How do I get more? And you keep playing that game with yourself. And then you see it going up and you're like, wow. And now the fear kicks in. Do I sell now, or do I just wait until I can get more? I don't want to lose out on more. And then you get FOMO, and then you're fearing that you're going to miss out on more. You're like, oh my God, I don't want to miss more. What if I could get more? And then later on, you get hit with regret by either selling too early, or you feel like you just got hit in the face with, a downtrend right after that because everybody else got out before you, and now you're stuck with junk that nobody wants. So, my plan here today is not to discourage you from short-term trading, but I just wanted to bring healthier options. So my idea is doing the best of investing. So investing in the long term, investing in disruptive technology is my thing. Focus on the technology and like the market size, the value that it adds to so many people, and seeing how that can be, capitalized on, and now you can make profits from that. So on my channel, I do talk about disruptive technology, and my investment horizon is at least 5 to 10 years. With that being said, I do short-term trade, not a whole lot. I would say, between 10 to 20%, because I just kind of got into options very recently as well. So I used that to kind of learn. I just kind of wanted to learn a little bit about it. I think I'm going to drop that back a lot, probably lower to 10% or 5%, dial it back, because it's not, it's short term, and I'm not very, super invested. The 5 reasons I mentioned today are exactly why I'm dialing back. I still plan to kind of dabble here and there because it keeps me on my toes in terms of what's going on in the market, and staying aware and trying to find the next new technology, the next new breakthrough. So I enjoy parts of it, but in the grand scheme of things, it's not the healthiest investment opportunity. So I also use, I would recommend anyone that's looking into long-term investments to use M1 Finance. It is a tool that lets you, long-term invest. You make a portfolio and you're able to kind of split it into a pie, break it up into different percentage and say, okay, I'm going to invest 25% of my portfolio in Tesla. And you're able to buy, splits of a share. So if you have $3,000 and you wanted to invest it into 5 different companies, you set the percentage of each, and it just kind of figures it out for you. And it's very nice, very neat, very safe. The one thing I like about it is it limits your trading to 1 a day if you're a regular user, and 2 a day, actually 1 a day also if you're a gold user, but you have 2 windows of trading if you're a gold user. But if you're a regular user, you have one window in the morning, so you would have to make your trades either the day before or the morning before the market opens. So with that being said, keep looking into value stocks. In my opinion, find the Amazon before it becomes the Amazon. Find companies that are making breakthroughs, changing lives, and doing more. It's your boy Elijah, and I'll be bringing you more disruptive technology on here. Let me know what you want to hear. Let me know if you like the video. Drop a like, subscribe if you're new. Welcome, because we will be having more bangers for you really soon. Stay tuned.